Hello, this is Matt on the Moon Lambo channel. I've made it known on this channel that I am a long-term hodler of XRP. I have no interest in trading. I don't even care about learning how to read charts. I appreciate the opinions and sentiments from chart analysts out there, kind of take a temperature of the room, so to speak, by getting opinions from a large swath of crypto traders and chart analysts. I do appreciate that. I personally have no interest in trading. The reason being, the vast majority of traders, and it's not just XRP, it's not just crypto, it's stocks. If you're a trader, something like 95%, literally 95% of traders ultimately lose money. And so for me, it's just like it's all about fundamentals, and none of what I'm going to say in this video is financial advice, period. I'm just sharing with you my everyday Joe Schmo opinion without a financial background. Do not buy or sell because of me, but I do want to share my opinion with you. And because for me, it's all about finding something of value, in this case, XRP. Finding that there's real-world adoption taking place. Finding that there's all sorts of developers building on top of the XRP ledger, and then understanding that only a tiny fraction of the planet even knows it exists, but understanding also how fundamentally transformative XRP can be as it pertains to moving money around the world. When you could take all that into consideration, that's why I'm thrilled to be here. That's why I really enjoy this hobby of putting XRP content on YouTube on a daily basis, quite literally. And it's the reason, because there is this, I feel like I found something that most others just haven't had the pleasure of coming across yet. I just feel like I found it so early. That's why this is exciting, but it's also the reason that I'm not going to FOMO in and I'm not going to panic sell. I believe intensely in holding. And so there's an article here from CCN, and it's titled, Morgan Creek Co-Founder Says It's Better for Most Investors to HODL Crypto. So I'm going to run through that, and then I got a couple tweets I'm going to share with you from the XRP community. And finally, I'm going to wrap up with this, which it's infrastructure related. Check this out. This is cool. It's from Financial Times. Fidelity rolls out cryptocurrency custody business. Fidelity's absolutely gigantic, and I can't wait to dive in. Oh my God, did I just get hit with a paywall? I'm not going to cover this. I'm not going to cover this. I was reading this earlier, and I pulled the webpage back up, and just got hit with a paywall. I'm not going to deal with this. Sorry, guys, can't cover it. This is freaking ridiculous. Oh my God, it was a good piece, too. Oh man, that's a shame. I need Coil. Where are you, Coil? Hurry up. Take over the planet. Come on. I need your third option for web monetization to be available. Stat. Sorry, guys. Yeah, such is life. All right, well, if you would please delicately tap that like button. I definitely appreciate all the support. And if you would please consider subscribing to the Moon Lambo channel, it would just make my day. Let's go ahead and dig into this first and only piece I'm covering now. Thank you for nothing, Financial Times. If you follow some of the best traders on crypto Twitter, you would think that trading with leverage is the best way to grow your crypto portfolio. After all, some of these traders post tremendous gains in short periods of time. Here's a tweet from Cold-Blooded Schiller. Today I'll be starting the @FTX Battle Royale thread on the trades I've taken and setups I'll be looking for over the coming weeks. I'll discuss some strategies and tips I've learned there too. Remember, you can stake me for a % of my P&L returned to you. So that's the type of stuff they're talking about here. While these traders flex their skills, they unwittingly make many of their followers think that trading is an easy game to play. Nothing could be further from the truth. As a result, a lot of retail traders lose a huge percentage of their capital trying to chase gains. Perhaps this is one of the reasons why a crypto investment firm executive suggested that it is better if most investors couldn't access their investment account for years. Now that seems to ring true to me. Because I understand that humans are acting like humans when there's been evidence of this, just the .com boom and bust. This is how humans behaved, except it's like that on steroids because this is a global phenomenon here. But look, in terms of like the XRP price movement, when it crashes, you do understand, I hope, that has nothing to do with the longevity of the use of XRP itself, right? You do understand when that happens or when it pumps, it's purely emotion-based. And if it's FOMO, it's follow the leader. If it's panic, it's a panic version of follow the leader. So to me, it does not matter. So that's why I'm impervious emotionally to these swings in terms of XRP price. It's not gonna make me sell. Nothing. I will ride this to zero if I'm wrong. Fine. I don't think I'm wrong. I am Mr. XRP Bull, but just saying. Subheading here, Anthony Pompliano, most investors would be better off if they lost the password to their account. Unless that means they lost access to their account forever, right? Anyway, the lure of doubling or tripling their market portfolio drives many retail traders to jump in on trades without managing risk. It's no wonder that only a small percentage of traders actually make money. Thus, it makes sense for most investors to buy cryptocurrencies or any other assets and wait for the bull market. This might take a year or two, but if it happens, it virtually assures them of massive gains. In addition, it will be without the stress that comes with swing trading. That's why, to me, it's just like, who wants to time the market? You're going to fail at it. Anthony Pompliano, co-founder of Morgan Creek Digital, took to Twitter to share his message to his followers. The big Bitcoin enthusiast said it would be better if most investors lost their login credentials so they can't access their account for a few years. Which, fair enough. Again, as long as they can ultimately access it. Otherwise, that's just bad. The strategy, better known as HODL to crypto traders, was supported by Fundstrat co-founder Thomas Lee. In a reply to Mr. Pompliano's tweet, the investment research executive said that there's a benefit to time-locking Bitcoin. And here's the tweet from Thomas Lee. And I quote him fairly frequently on this channel. He writes, yes, time-locking Bitcoin would let people benefit from the compound benefit of network value growth. And then the piece continues, Pompliano isn't the only one who believes that hodling is an effective strategy to grow your Bitcoin or crypto stockpile. Ricky Lee, co-founder at Autonomy, says that hodling tends to outperform quant funds in a bullish Bitcoin market. On top of that, the strategy is also used by the smart money. In an interview with CCN, Lee said, HODL is not just a retail investment strategy. Large institutions, especially crypto VC funds, possess large parts of exposure to Bitcoin spot in order to capture market beta. In the case of the strategy, Bitcoin mining is arguably a better approach than just spot purchasing, as mining is considered a consistent discount to spot purchases given the large capital and operational investment needed up front. Indeed. Of course, a professional trader who knows how to get in and get out at the right time can greatly improve the return on investment, but it is not advisable for a majority of investors. Large market movements are often unforeseen and concentrated over time. Being out of the market on a few of those positive days can ruin a positive year. When implementing a buy and hold strategy, it must be clear that these are very long-term strategies, as market cycles are temporarily very large. And this is a point that I have made on this channel in the past, and you need to be aware of this. Make your own buying and selling decisions. I'm not telling you what to do, just sharing with you, but you need to know about this. The most important activity over any calendar year, 365 days, unless it's leap year, 365 days, it happens over about 10 days, and that's what the next part of this piece covers here. Like 10 days, and maybe it's 9 days or 11 days, whatever. The point is it's a small quantity of days on whatever given year, and if you don't have exposure at those times, you miss out on the most substantial gains that there were. And so that's why the buying and selling, getting in and out of positions, it doesn't make any damn sense. All right, so take a look at this. The statement of Mr. Salas about large market movements being concentrated is supported by research. Thomas Lee reported that most of Bitcoin's gains in the last 6 years came in the best 10 days of each year. Here's a tweet from Thomas Lee. Before everyone starts freaking out whether crypto winter is over, remember the Fundstrat rule of 10 best days. Rule number 6. X 10 best days, Bitcoin down 25% per year. All the gains come in 10 days. Are you that good at trading? P.S. We believe Bitcoin is weak in trendless macro. So what he's saying there, in case you didn't understand what he was getting at, what he said is, without the 10 best days of Bitcoin in a calendar year, it's actually historically down 25% per year for basically the entirety of its existence, just about. 25% per year Bitcoin's down if you take out the 10 best days. If you don't have exposure during those 10 days, you're screwed. Okay? And this holds true for the entire crypto asset class because everything's following Bitcoin. And look at XRP. It's probably even worse if there were data on this. It's probably even worse for XRP if you're a trader because it stays flat for longer periods of time, and then it has, historically anyway, it has. We'll see if it continues to, but it stayed more or less flat, and then it has these huge bursts at times. And so if you don't have exposure when that happens, you're screwed. So then he says, Thomas Lee, and it's such a good question, are you that good at trading? Because you got to be kind of cocky, or you have false confidence, right? Because it's only a small percentage of individuals out there that actually have that level of skill, right? And then it states, to wrap up, the report clearly affirms Pompliano's tweet, it might be better to forget about your crypto investments for now and wait for the bull market. And so that's my entire strategy. I'm happy to share it with you. You do what you want. I'm not telling you what to do. But to me, it only makes sense to hold. And if you really believe that XRP is going somewhere, just hold it, if that's what you believe, if you think that makes sense for you, right? All right, next here's a tweet from Digital Asset Investor. You tweeted out, no idea if Brad Garlinghouse will agree to an interview. And I should preface this, some of you know this, but some of you may not. So fellow XRP YouTuber, Digital Asset Investor, was invited to Ripple's Swell in Singapore, November 7th and 8th. He was invited by Ripple, coolest thing on the freaking planet. He's made videos about this, so I'm sure a lot of you know. But anyway, so he wrote, no idea if Brad Garlinghouse will agree to an interview, it's Ripple CEO, but if he does, I'm going to ask questions that come from the XRP community. Send me questions, and I'm going to collect them and shout out your Twitter handle just as I do on YouTube. So, who knows? He actually might get a crack at this, so if you want to, I just wanted to share this with you. Hop on Twitter, go ahead and respond, and if you got a good question, just thought I'd put it out there. All right, and next, this is what I can't cover with you now because of paywalls. Fidelity rolls out cryptocurrency custody business, which I also originally got from All the Way 08, so I wanted to highlight him too. He tweeted out, brilliant move by Fidelity. They are very trusted and will likely be a leader in this space. This is some serious adoption. And here's the paywall, which was not there the first time I read it, and I didn't know that when I came back it was going to be here because I don't usually come across this website. And so I just opened the link after doing my prep this morning for the videos I'm going to record, and here we are. So here's the part I can read. Expert insights, analysis, and smart data help you cut through the noise to spot trends, risks, and opportunities. Join over, oh God, that's not even the article. Join over 300,000. They're just, oh God, I can't even read a piece of it. Ah, damn it. You're ruining my Friday, Financial Times. Go home. I don't like you. All right, that's it for this video. I'm not a financial advisor. Do not buy or sell anything because of anything that I say or write. That would be a very, very, very bad idea. Until next time, to the moon, Lambo!